All okay for Asia. Like we've been telling you, a couple of markets have taken the day off, including China, so it is a more quiet Asian screen this morning. That's what it's looking like, rallies of about 2 to 3% today. As promised, here's more on the technicals for our market and for other global markets. Jordan Kotick joins in to talk about that. Jordan, morning. There have been some stray voices indicating that perhaps this is the return of a new bull market rally. From what you've seen of the technicals, would you go with that?
It's important to make a very clear distinction here. When we talk about bull markets or bear markets, they're just words, and I see them confusing a lot of clients around the world. Whether it's a bull or a bear market depends on your time frame. So instead of using labels, let's get right to what's clear in terms of what we should expect in the second quarter. Is it a bull market for the second quarter? We believe it is a bull market in the second quarter. We perhaps think it will be a bull market into the third quarter. If you're a very short-term trader, you're going to say it's a bull market. If you're a long-term trader, you'll probably still assume it's a bear market, and we think rightfully so. So for the focus, which is bullish, in Q2 and Q3, we believe is to the upside in global markets, including the Sensex and Nifty. But bigger picture, there's a lot more work to do before one can assume that the entire secular bear trend is done, and that's measured in years. For now, keep the focus higher for a few quarters we've been suggesting, and that's where we think the bull market traction lies.
Morning, Jordan. How much of a higher target can you keep on the Sensex from here? And technically, do you have the conviction that 8,000 was a bottom for the Sensex?
We do believe the markets have made a bottom. Certainly the Sensex and the Nifty, alongside other global markets, do look like they're turning higher, just in different stages. Some are outperforming, some are underperforming. As we've been talking the last couple of weeks, that 10,600 to 11,000 areas on the Sensex, for example, we think are important. And once you get through there, we can see the market easily adding 1,000, maybe 2,000 points to the Sensex before we start to reevaluate it later in the quarter.
What do you see as the key issues weighing down the market or weighing on the market, Jordan? Because we've got a couple of domestic factors like elections, plus there's this global rally going.
This is a highly volatile, it's a very emotional market. There's a lot of intraday things to watch for. There's a lot of day-to-day things to watch for. If we were to just drill down what we think are the most important, is remember, we would think what is important with India is it's a part of not only the global marketplace, but the BRIC countries, Brazil, Russia, India, China. If there's going to be a risk to our forecast that the Sensex and Nifty are going up, one of the risks we're going to see, what we would see is the Brazilian stock market, Russia, China to the downside, Hang Seng, some of the markets that have been leading to the top side start to roll. If we see that, that would be the risk to the forecast. That would be the warning sign outside of the Sensex itself rolling, but that something is coming. For now, we don't believe that. We think the markets are going higher around the world, global stock markets. It will lift the Sensex with it. But if we're wrong in this forecast, where we expect to see it, where we expect to see these risks emerge, will be in global equities. Those that lead start to roll over. That would be a warning sign we'd watch for in Q2, Q3, should we be wrong in this forecast.
Jordan Kotick, thanks very much for joining in today. Those are global technicals from Barclays. Let's get